Right now, as you are watching this video, something massive is unfolding in the global silver market, and the overwhelming majority of silver holders have absolutely no idea what is coming their way. We are talking about a decision made thousands of miles away, in Tehran, Iran, that could send shockwaves straight into your silver stack, your portfolio, and the entire precious metals market as we know it. If you have been sitting on silver, waiting for that one moment that finally triggers the next big move, this might be it. Do not touch that back button. Do not scroll away. Because in the next few minutes, I'm going to break down exactly what Iran just did, why the global financial world is holding its breath, and what smart silver holders need to understand before Monday morning. Welcome to OG John Market, where we cut through the noise and give you the real picture. And before we go any further, if you are new here, hit that subscribe button right now and smash that like button. We cover silver, gold, geopolitics, and the moves that the mainstream financial media refuses to talk about. You do not want to miss what is coming next. Now let us get into it. To understand what Iran's decision means for silver, we first have to zoom out and look at the bigger picture, because this is not just about one country making one announcement. This is about a deeply connected chain of events that stretches from the Middle East all the way to the US dollar, to global trade flows, to the commodities market, and ultimately right into the price of the silver sitting in your safe or your brokerage account. And the reason most silver holders are not ready for this is simple. They are only watching the silver chart. They are not watching the forces that move the silver chart. Iran, for the past several years, has been one of the most sanctioned nations on the planet, locked out of the SWIFT banking system, cut off from dollar-denominated trade, and economically squeezed by the United States and its allies. But here is what most people do not fully appreciate. Iran has not been sitting still. Behind the scenes, Iran has been building alternative financial architecture. They have been deepening ties with Russia, with China, with the BRICS coalition. They have been quietly moving toward a system of trade that does not require the US dollar as the middleman. And now, they have made a decision that signals a major escalation in that strategy. Reports coming out of multiple international financial intelligence sources indicate that Iran is accelerating its shift toward gold and commodity-backed trade settlement. In plain English, they are moving away from dollar trade and toward hard assets. And silver, as one of the most critical industrial and monetary metals on the planet, sits right at the center of this shift. When a nation the size of Iran begins moving in this direction, it does not happen in a vacuum. Other nations notice, other central banks adjust, other commodity buyers and sellers start recalculating their positions. Now here is where it gets really interesting, and this is the part that OG John Market wants you to burn into your memory. Silver is not just a monetary metal anymore. Silver is a strategic industrial metal. It is the backbone of solar panels. It is critical for electronics, for electric vehicles, for defense technology, for medical equipment. The demand story for silver is already extraordinarily bullish on its own. Global solar panel installations are breaking records year after year, and every single one of those panels requires a significant amount of silver. The EV revolution is accelerating, and every single EV uses more silver than a traditional combustion engine vehicle. The AI data center build-out is creating massive new demand for electronics and cooling systems, all of which use silver. So before you even layer geopolitics on top of this, the fundamental demand picture for silver was already incredibly strong. The supply side, meanwhile, has been struggling to keep up. Primary silver miners have been underinvested for years. The grades coming out of existing mines are declining. New discoveries are rare and take a decade or more to bring to production. The silver market was already tighter than most people realize. And now you add the geopolitical wildcard, nations like Iran accelerating their pivot toward hard asset trade, and suddenly the silver market is sitting on top of a pressure cooker. Let me explain the mechanism more clearly, because this is where the story really connects. When nations engage in sanctions evasion or alternative trade settlement, they need assets that are universally recognized as stores of value and that are liquid enough to actually use in trade. Gold is the obvious first choice, and Iran has been accumulating gold aggressively, but gold is expensive. Gold is heavy. Gold moves in large, traceable quantities that attract attention. Silver, on the other hand, is more accessible, more versatile, and critically, silver has that industrial demand side that gives it a second layer of value beyond just monetary storage. When you are a sanctioned nation trying to do business outside the dollar system, silver becomes a very attractive tool. And when multiple actors start moving in this direction simultaneously, you get the beginning of what some analysts are now calling a silver demand supercycle. But here's the twist that most people completely overlook. And this is the insight that separates OG John Market viewers from the average retail investor. The silver paper market and the physical silver market are two completely different animals. On the COMEX, on the futures exchanges, the price of silver is set largely by paper contracts, promises to deliver silver, not by actual physical silver changing hands. For years, this system has allowed large financial institutions to suppress the silver price by flooding the market with paper contracts. But here is what breaks that system. When enough physical silver gets pulled out of the market, when enough demand for actual, deliverable, touchable, stackable silver starts to outpace the amount of physical metal sitting in vaults, the paper price and the physical price start to diverge. And when that divergence gets large enough, the paper market breaks. The price discovery mechanism snaps, and the price of silver resets dramatically higher to reflect true physical reality. We have seen early signals of this already. COMEX silver inventories have been declining. The silver lease rates, which tell you how tight the physical silver lending market is, have been spiking. The premiums on physical silver coins and bars at dealers have been elevated above the spot price. These are all early warning signs that the physical market is tightening. And now, add the Iran factor, add the broader BRICS de-dollarization push, add the record solar demand, add the EV ramp, add the AI-driven electronics boom, add the underinvestment in mining supply. You pile all of these things on top of each other, and you start to see why some of the most credible voices in the precious metals world are now talking about silver in ways they never have before. Now, what does this mean for you practically? First, if you do not own any physical silver, you need to seriously reconsider that position. Not financial advice, but the risk-reward on silver at current prices, given everything we just walked through, is about as compelling as it gets. Second, if you already own silver, congratulations. But you need to think carefully about whether your position sizing actually reflects the opportunity in front of you. A lot of silver holders own a little silver as a hedge. Given the confluence of factors we are seeing right now, the case can be made that silver deserves a much more meaningful allocation. Third, and this is critical, understand the difference between paper silver and physical silver. ETFs, futures contracts, paper promises, these carry counterparty risk. In a scenario where the physical market disconnects from the paper market, paper silver may not perform the way you expect. Real, allocated physical silver in your possession or in a trusted vault is a completely different asset. The geopolitical dimension of this story is also not going away anytime soon. The US dollar's dominance in global trade is being challenged in a way that it has not been challenged since the Bretton Woods era. The BRICS nations, Brazil, Russia, India, China, South Africa, and now multiple new members, represent a huge and growing share of global GDP and global trade. As they build out alternative payment systems, alternative reserve assets, and alternative trade routes, the demand for hard assets outside the dollar system is going to keep growing. Iran's latest move is one chapter in a much longer story, and silver is sitting right at the intersection of all of it: the monetary story, the industrial story, the geopolitical story, and the supply crunch story. OG John Market has been tracking this intersection for a long time, and what makes this moment feel different is the convergence. The way all of these independent threads are now pulling in the same direction at the same time. That is when markets make their biggest moves. That is when the people who are paying attention get rewarded. And that is when the people who were not paying attention look back and wish they had acted sooner. Here's the bottom line. Silver holders should not be scared by what Iran just did. They should be energized by it, because it is one more piece of evidence that the global financial system is undergoing a structural shift, and silver is one of the best positioned assets to benefit from that shift. The question is not whether this story plays out. The question is whether you are positioned for it when it does. And that is exactly why we do what we do here at OG John Market, to give you the context, the analysis, and the perspective that keeps you ahead of the market, not chasing it. All right, before you go, I want to hear from you in the comments right now. Are you adding to your silver position given everything going on? Are you watching the Iran situation closely? Drop your thoughts below. The OG John Market community has some of the sharpest minds in the precious metals space, and I want to know what you are seeing on the ground. And if this video gave you a new angle on silver that you had not considered before, share it. Send it to someone in your circle who needs to hear this, because this is the kind of information that could genuinely change how someone thinks about their financial future. Share this video, drop a comment, and stay locked in, because the next few weeks in the silver market could be some of the most important weeks we have seen in years. I will see you in the next one.